Whenever you have a May 14th, 2024, whenever you have a small daily range like we had for the first half of the day, you can see, the market a lot of times will try and double. And, by small, I would say look, and, you can see that we had about, a 19-ish range coming into, the 46th bar of the day, right? So, the past couple days have been 30 range, 31, 40. So 19 probably is not big enough, and we're probably going to get some sort of breakout to either side. And it's really interesting when the market does this, but you can see we got a measured move up based on the height of the range. And what's really, really interesting is it was exact. And you can see on bar 71, we tried to test the exact measured move. We got within one tick, but weren't quite able to get it. And that's why we ended up rallying back to that new high here because traders wanted to touch the exact measured move. So they weren't satisfied that 71 had tested that high, and traders wanted to get all the way back up to that high. And that's why we sold off so aggressively on bar 78, is because we just touched that measured move that was relatively important. You can probably just buy above the high of the day and bet that we're going to go at least above this high or that high because this was a big double top. And it looks like, at this point, it looks like the double top's failing. So we're probably going to get back to at least that high. Additionally, the double top on the daily chart was this. So once we're up here, you have to be thinking we're going to try and run these stops. Essentially, same thing that I just said, but showing it on the daily chart. And we probably weren't going to get another inside day. We had just had an inside day, and the odds of us, getting an II were less likely. So I thought it was likely that we were going to go above the prior day's high. Bar one, a bear bar closing, around, somewhat near its low, but it's a bear doji bar. It's closing in basically the middle of yesterday's tight trading range that we finished the day. Bar two, it's a high one for the bulls. They would argue the gap up is the start of their bull trend, and bar two is the high one. If you buy above two, I'd probably rather wait. I think that it's better to just see what happens, and you get some follow through on bar three, which is good. But traders are probably going to be scalping since it's pretty early in the day. Additionally, the bears who sold above one are probably going to be able to scale in higher on three and make money. You can see four is a bear bar. There's tail on the top, so you can say micro double top, 3, 4. You can see here with the tails, micro double top. And 4 is a credible high of the day, but it's not that great of a sell. Maybe 30% chance that it ends up being the high of the day. But you probably need good follow through on 5. And 5 was a bull bar for the vast majority of the bar. So I'm not really all that interested in selling it. It only triggered like 4 minutes into the bar. So when you're selling a bar like 4, you want to see a huge follow through bar. And if you're 4 minutes into the bar by the time it triggers and there's already a big tail, it's really not ideal. 6, a good bar for the bears, but looks like a second leg down to me. We were probably going to get a second leg down from 4 since the setup was somewhat credible. And 6 could just be that second leg. 7, probably sellers above 6. Bulls would argue, looks like a big high 1 for the bulls, so really not all that good. And then surprise bar up on 8. 8 is one of those trades that, I kind of chuckled at myself today because this is the kind of trade that I used to love to take, and I would just, lose. I would, buy above 8 and put a stop below 7, get stopped out, and then 11 would happen, and I'd feel like the market was targeting me. But it's not. It's just a trading range. And what you have to realize is if you're buying the high of bar 8, you're buying at the top of a wedge, right? 1, 3, 8 is 3 pushes up. Additionally, that this was a spike and then this was a channel. And so the top of the channel is going to be resistance. And you can see if you're buying bar 8, you're buying right at the high of that channel. So if you're buying 8, you're buying a third push up at the high of this channel. So what does that mean? It means the probability really isn't all that great. And if the probability is not that great, then what do you want for your trade? Well, if the probability is not very good, you want small risk on your trade. Except look at bar 8, it's huge. So instead of having small risk, you now have really big risk and bad probability. And when you combine those things, that doesn't make for a very good buy above 8. Instead, traders ended up selling above 8 and sold the close of 8, which is why we got a micro gap down on 8. 9, it's still a wedge top. I thought it was okay to sell below 9, but 9 got a lot bigger in the last minute, and it made it a less desirable sell with the tail on the bottom as well. Made it more likely we were still in a trading range day. Additionally, 8 was a big bull bar closing near its high, so it's going to end up being a magnet. We're probably going to have to get back to it at some point later today, which is why the traders who, that's why these are considered quote unquote reasonable buys, is because if you take the buy and you scale in lower, you think we're probably going to get back to it. But it's less confusing to just think of a big bull bar closing near its high as a magnet in the future. And you can see even bar 24, if you scaled in all the way, you were able to get out over here. So I thought that we were probably going to get back to the 8 high, which complicated selling the 9 low, especially considering it was not as good of a signal bar as it could have been. And what did the traders who sold below 9 do? The market needs to go 22 ticks, so 5.5 points for traders to make 5 points. And that's exactly how far it went. You can see we went 5.5 points down. So traders sold below 9, they made their 5 points, and they scalped out. And that's what's part of what's causing the big rally on 11. They know that the 9 low is probably a magnet because it wasn't a very good signal bar. And there are probably buyers below the 7 low scaling in lower at the low of the day. So traders were quick to take profits, and then you get a huge bull bar closing near its high on 11. 11 is a breakout attempt above this wedge, and we're closing decently above this resistance over here. So do you buy above 11? I thought it was okay. I thought, obviously a big risk, which is still a problem, huge risk, but I thought that the probability was, decently better. And I did think we were going above these highs at some point today, especially after we got 11. So I thought it was reasonable to take a chance that we got the rally now. And it was early enough in the day that, who knows, you might end up getting some sort of big bull trend. It didn't seem that likely because I thought the context on the daily chart, I still think the context on the daily chart isn't all that great for us to just go straight up to here. At this point, I wouldn't be super surprised if we just rallied up to a new high. But I would be definitely a little surprised. It would have to be one big give up bar, essentially, if that were to happen. 12, follow through for the bulls, but it's not all that great. I think if you bought above 11, 12 is somewhat disappointing. I think you wanted to see a better follow through bar. 13, disappointment for the bulls. And the problem with buying above 11 is you get up below 13. I think you get it a couple points below 13. So you definitely cannot buy above 11, stop below 10, and let the stop get hit. Because the reality is, if you're selling out of your long down there, that's probably right where you should be buying more instead. So your two options for buying above 11 are buy really, really small and add on below bar 10 and use the rally all the way back up. You can see here to exit your first trade at break even and your second trade down here with a profit. Or you can just get out quickly as 14 is falling, maybe somewhere in here. 14, a huge bear bar with a big tail on the bottom. This is an expanding triangle open. You can see we have 4 points here. I'd say only 2 points down here. So it's not the cleanest expanding triangle, but it is an expanding triangle open. So I think at this point, you should be really relatively hesitant. I think that once you see 12 or 11 and 12 and then 14, you should immediately take a step back from your computer and just give the market some time because it's big up, big down. And that's probably going to lead to a relatively sideways for a couple of hours. And then you see a bar like 15. It's a small inside bar closing near high. Do you buy above it? You probably can because it's trading range and expanding triangle. So you're buying low, but some traders don't even, 15 is not even that good of a bar. So a lot of traders want to buy even lower. And instead, they'll wait for 16 to pull back 50% of 15 and they'll buy there instead. Why? Because they want better risk reward because the probability is not quite what you want it to be. Remember, whenever you're in a trading range, the probabilities are never quite what you want them to be. So you want to take trades with smaller risk, which is why traders will buy 50% pullbacks more often in trading ranges because they want to take the trades that have a bit less risk for them. 16, a doji follow through bar, really not ideal follow through, but I think, not really all that great for the bears. They're looking for it to be a low one short, but I don't think that we're going that much lower if we do go any lower at all. And you can see we also reversed up. We touched 14, 15 micro double bottom at yesterday's close. So a credible area to reverse and towards the bottom of the trading range. 17, another essentially doji bar, really not all that good. Small bull close, but again, I don't think this is ideal. And then 18, huge bull bar closing near its high. Am I buying above 18? Nope. 18 is a profit-taking bar. This is, great bar for the bulls, but look to the left. Big up, big down, big confusion. I'd rather just sit out and not do anything. 19, disappointment, which is relatively expected. Anytime you're in the middle or upper part of a trading range, buying, you should be expecting to be disappointed. And anytime you're in the lower third of a trading range or the middle third of a trading range, you should be expecting to be disappointed if you sell. 20, a bull bar closing near its high. It's a high one. It's a high one inside bar for the bulls, but I don't want to take the buy. I think you're buying, still really high in the trading range. Good for the bulls that we got the pullback on 19 because now you can put a stop below 19 if you buy above 20, so your risk is smaller. But I just don't want to buy this high. I don't think there's that much left to the upside. 21, bad follow through for the bulls who bought above 20. We might end up getting some sort of scalp. I thought buying above 20, you might end up getting some sort of quick bounce for a couple points to the 12 low, but I wasn't that sure we were going to get some sort of big rally. 22, a reversal down. You could argue 2 legs up, 1, 2, or you could say some sort of wedge, 1, 2, 3. And the wedge is probably the better argument. It's a lower high and essentially a head and shoulders top. Left shoulder, head, right shoulder for 22. So you can, in theory, sell 22 with a 40% chance of a breakout below the neckline, which is the 14 low, and a measured move down. But I probably would not take that sort of short. I thought 22, I wanted it to close on its low if I was going to sell it, and instead it did not. And so I thought we might still be in the tight trading range. We were probably going to have to test down to the 19 low since that was the channel low, but expecting mostly sideways trading. A doji bar on 23, disappointing for for traders who do sell below 22. I think we're going to be a little more sideways. And then you can see if you sold below 22, what did you want to see, right? It's kind of the same thing, the same thing you wanted to see if you sold below 4. You wanted to see bar 25, but you wanted to see it on 23 instead, because traders want really good follow through. If they're taking a sell, that's a bit lower probability, like I think 22 was. And so instead of that, then what do they do, right? So you see 22, you sell. Maybe you're thinking, okay, maybe we're gonna get a big sell off. And then you see 23, you're thinking, okay, well, this is probably still a trading range. I don't want to keep this much risk on. So traders will use 24 and exit and then sell again, maybe around a 50% pullback during 24. But 24 closes on its high. So disappointing bar, but I think 3 legs up. I don't want to buy above 24. And it never even triggered. We got buy the close bulls who bought the close 24, immediately trapped on 25. Huge bear bar closing near its low 25. I think we're always in short. I thought from yesterday, the major trend reversal, we were always in long all the way through here. Probably always in short on 14, but very much trading range always in short. So not really anything great. But I thought the first real chance for a good swing was 25 today. But a big bar in a trading range, so a bit tough. 26 follow through for the Bears, but is this really the follow through you wanted if you sold 25? Not really. It's good enough for a lot of traders to stay short, but it's really not all that great. And I thought the fact that 27 traded above 26 was important. Why was it important? Because what it does is it makes it possible that 27 is your second leg down. You know that 25 is strong enough for a second leg down, and 26 is essentially your confirmation that you now have follow through and you might get some sort of second leg down. Instead, you get outside down 27, which makes it possible that since we traded above 26, 27 is the second leg. And then a bull close on 28. Is it a good bull close? No, but a bull close is a bull close in what you're hoping is going to be a big bear trend. And then 29, a low one short for the Bears, but not really all that good. It's a bull bar. 30 bear bar closing near its low, but I'm not selling it. I think, if 27 is the second leg down, then 30 is the third leg down, and I'm not selling a third leg down low in a trading range. That's usually not going to go very well. Some follow through on 31, but a big tail on the bottom, a big tail on the top seems more neutral to me, and we're low in a trading range. We are always in short, but still definitely within a trading range. Again, at this point, something to keep in mind is we have a very small opening range. So, it's not really in the opening range anymore, but our daily range is very small at this point. So you could be expecting that when we get the breakout of the 18 bar range, we might try and double it. 32, a bull bar, but a tail on the top, tail on the bottom. I think we're going to be more sideways. We're within a tight trading range essentially here. 33 is a low 2 pullback to the moving average. You could maybe sell it. I'd probably rather wait for follow through. 34 is a credible sell. It's consecutive bear bars. It closes somewhat near its low. But again, I think we're going to end up starting to go more sideways here. Sorry. We are always in short, and it is consecutive bear bars, a low 2, but probably buyers if we do get to the low of the day. 35, a bear bar closing near its low, but it looks climactic to me after 33 and 34. This is a weaker bear channel, so you probably want to be selling higher in the channel rather than lower. Inside bar, 36. Bull bar closing somewhat near its high. It could be a wedge, 27, 31, and 35 or 36. But, we don't end up triggering the buy on 37. It was probably okay for a bounce if we triggered 36, which is why traders sold the close of it, trying not to let it trigger. But if you were holding it for a major reversal, we might have to get to a new low first. I thought it was important that we test a little bit lower. and test, because we were so close to the downside of the 18 bar range that I figured we had to at least see what was there before we started any sort of rally. 37, disappointing. Like I said, never traded above 36, but traded below 36. Probably buyers below 36 though, since it's a bad short. Outside down 38, but I don't really think I'm taking any shorts at this point. I want to see a strong breakout below the low of the day and start some sort of measured move down before I sell. We're in a bear channel though. I wanted to break out in some sort of clear bear trend, and we're not really getting it. 39, an inside bar, but could be a final flag. I'd just rather wait. And again, we're so close to this low, we're probably gonna have to touch it, but there's not much left to this downside. And we end up getting a reversal up 40. Still a wedge. Might get a few legs sideways to up, but I don't really want to take anything. 41, a doji bar, especially with this being having a tail and being in the bear channel. 41, a doji bar, bad follow through, and 42 looks like a second leg trap to the moving average. Not worth buying above. Wait to see if 43 is good follow through. And then outside down 43, but a big tail on the bottom, so not really worth selling anything. And then bears, they're trying to get, they know the market's always in short, and they're trying to get the downside breakout. Bulls know that the bears are trying to get the downside breakout, so the bulls are buying aggressively in here, trying to put big tails on these bars and cause uncertainty. And they did a good job of it, and that's why we got uncertainty 43, 44. And then big tail on 45 inside bar, low one short, but just looks like a final flag at the bottom of the trading range and around yesterday's close still. Sorry, my throat's really dry today. And then a reversal up 46, big wedge. Let's pause this for a second. 46, a bull bar closing near its high. For me, I just saw it as a wedge and a triangle. And you're buying the apex of a triangle low in a trading range. I thought that this was strong enough that we were probably only going to get a couple legs sideways to up and then some sort of sell-off. Not like a big sell-off, but just a second leg down from this tight channel. So I thought this was a good looking candidate for a bounce, but I wasn't sure how much of a reversal we were really going to get. I thought that the midpoint of the day was a relatively good point to take profits, and you can see this is exactly where we got. Now, why the midpoint of the day? Because on a trading range day, the midpoint of the day is going to be where traders are taking profits. If you're selling, you try to take profits in the middle of the day. You're buying low, you try to take profits at the midpoint of the day. Additionally, the 27 high, you got a spike and then a pullback. The first pullback was above the 26 high, and so it channeled down from 27 to 46. So the top of the channel is the 27 high. Reasonable to think some traders are going to exit there. So 47 follow through for the bulls, but a big doji bar, although it does create some true risk, you can see. So some traders, we get more follow through 48 to close above the moving average. It would have been better if the bulls had gotten to close above the moving average somewhere in here. And then this reversal down from up here, that would have been really good. But instead, we did not have one, which is one of the things that made me think that traders would be exiting up here. 49. And you can see 49 got to exactly 2-to-1 of traders' true risk, which was the little measure move I was just doing. So if you bought above 46, you actually had to have a stop down here. And that's why we got to that high on 49, and some traders exited, causing the bear bar closing near its low. We're probably still getting a second leg up. This is decently tight, and the bears kind of had their chance, so we should get a bounce. I thought we were going to be sideways for the rest of the day. I wasn't going to be surprised if we got to the low of 25 since it was a swing point. I thought the 24 close was a bit of a stretch, but we might get there. Since it was the big bull bar closing near its high, and those are magnets. And the 25 high is a sell climax high, and this is a trading range. So 51, a huge bull bar. It's really climactic. If I'm long, I'm exiting everything I'm in on the close of 51. I don't, there's ways to get back in. I don't care about this. If I'm buying here, I have 5 points, right? I thought a lot of traders would buy looking for 5 points, which was here. So you have your 5 points, you're at resistance, you're in the middle of a trading range day, and it's a really climactic bar. I would hit the flatten button on the close of 51 personally. 52, a bear bar, because traders are exiting. I think traders get out below 52. If you buy again above 53, I wouldn't. I think that buying above 53, you're potentially buying a third leg up. I would probably wait and see what happens. If we start to rally, then maybe you can look to buy. 54, disappointing follow through for the traders who bought above 53. And then 55 is what changed everything. 55 is a good looking bull bar. You can see actually we had a couple of interesting open gaps, right? If you bought above, or if you sold above 46 during 47, you can see 48 does not overlap the 46 high. by even one tick. It just touched it, so it does not overlap it, which makes this stronger for the bulls. You can see we have this open gap, the 47 high and the 49 low, another gap for the bulls. And then we ended up getting this open gap here. So if you had sold above 54 and you see 55, a lot of those traders are thinking, uh-oh, I might be trapped. This could be a bull trend. And then when you get 56, those traders really think they're trapped, and that's what causes 57. You can see we had the 54, 56 open gap, and traders start to give up on 57, and that causes the big rally. Where's the rally go? It goes to the close of bar 12, because the close of bar 12 was consecutive bull bars, and a lot of traders were hoping that we were going to get a big rally up from here, hoping the rally up from here was going to touch this. Sorry, I'm misspeaking. We touched the 12 close because it's consecutive bull bars, and it was theoretically reasonable to buy the 12 close. We have not touched it again yet. So that's why, and it's trading range day, and on trading range days, we usually test those magnets. 58, follow through for the bulls, more follow through. 59, traders are going to buy below 59 since the first reversal down is going to fail. 59 is, basically a low one in a big bull trend in a bull bar, so not really a good sell. So a lot of traders eager to buy below 59 during 60. 60 gets bought up. I think you can just buy above 60, because if we're, we tested down on 61 before we went up. So if realistically, if we're going to rally, it's not going to go below 60 at this point. So you can probably buy above 60 with the stop below 60 and just bet on momentum and the fact that we're going to go above these highs, expecting the double top, the big double top here to fail. We do have, it's interesting. We do have a lot of lower highs here. They're small, but they are lower highs. And, we do, with the bodies at least, have higher highs. So this was essentially creating a much bigger triangle. Didn't quite get to the apex before it broke out, but be interested to see if we pull back, below all these highs later this week, maybe tomorrow. Follow through 61, 62, 63. If you bought above 61 and you get, 62, 63, you're able to make like 10 points buying above 61. Or sorry, not quite 10 points. I don't know why I thought that. But you're able to make 2 to 1 of your true risk for sure. So I think a lot of traders will just take profits. And you can see if you bought the close or bought above 61, your 2 to 1 was basically exactly at the close of 63, which is why a lot of traders took profits, causing 64. 65, an inside bar high one, a reasonable buy, but how much is left on to this on the day? I think a lot of traders will just get out below 67. You probably don't absolutely have to, but I think most traders will just get out. And then pretty sideways for the rest of the day. Like I said, I wouldn't do anything after, if you got out in here, I wouldn't do anything for the rest of the day. I would just leave this alone. And we did end up touching the measure move, which was cool. For always in, I thought we were always in long, basically coming into the day, and probably flipped always in short in here, but a trading range, hard to say if we flipped always in long. 18 is such a big bar that we might have, but following these, I'm not really that sure we were ever really always in long. 25, I think back to clearly always in short. And, if you sold 25, there was never really a reason that you could have gotten out. I think in a lot of spots, it's probably pretty easy to get shaken out, but you never really had to, I would say, until you probably have to get out above 42, definitely above 46. For stop orders, I thought, 9 was reasonable for probably a scalp. 15 was probably fine, but tough. 25. And then, I wouldn't really sell anything else, but then 46, good buy. You probably buy above 48. 55, definitely. And then it's buy the close, pretty much all the way up. On the daily chart, you can see we're getting a rally above this high one, but the high one bear bar, pretty high up, but really tight channel. We're definitely going to the new high. The question is, are we going to go there, get vacuum there immediately, or start to go a little more sideways first? I think we'll probably go a little more sideways first, and then ultimately this is a leg in a trading range, which makes this a leg in a trading range. We're probably going to go above it. I'm not sure how much higher, but I think the bears who sell above there and scaling are going to make money if we get to the high. I don't think we're going to go get some measured move up before we start to pull back and form a trading range for a little while. And yeah, that's today.